Want to welcome you all out to the April AgriSompo North America marketing meeting. We find ourselves a little bit in what we kind of refer to as the doldrums of the marketplace, not a time of the year where volatility is necessarily high. And for the last 60 days or so, there really hasn't been an event that could change the number of corn and soybean bushels across the globe in a significant manner. In other words, weather didn't really play an impact on supplies. We are just now starting to get into that season. And of course, it's planting season here in the U.S. We've had a little dialogue just prior to the official start here about where things are at. And, the respondents so far, I gave a little update on Illinois, not very far along, but maybe 10 or 15% overall. I just see a Southeast Kansas update, 73% planted for corn. So, wow, that's impressive. Iowa was reported there in central Iowa around 20%. And Wayne mentioned out in Ohio, he joined us here since I've made that comment that things were off to a good start, not really a percentage number from out there. But the bottom line is the I-states and Ohio getting things started. Having said that, Sterling, you mentioned the Farm Bill earlier, and we are going to talk markets. We want to talk about wheat. We want to talk about some old crop corn. We're going to go back to the March meeting and talk about some advice that Sterling and I gave on old crop. We hope you followed it. We'll see how that pans out. We'll talk about soybeans too. Soybeans seem like they continue to have this next life, but the last few days have not been good trade days there. So I guess I'll start off with the Farm Bill situation. I spent some time in Washington, D.C. last week. And what you're going to see from the AgriSompo group is a lot of Farm Bill information over the coming weeks. We are promising to lead the charge of all AIPs out there when it comes to distributing information and also having a presence through our organizations in Washington, D.C. and folks like ourselves going out visiting with representatives and senators to make sure that this Farm Bill has everything we need in it when it comes to crop insurance. It's funny. One of the things, and I won't go into great detail, it's interesting enough, this is going to be the 18th Farm Bill that's been passed. They didn't used to be called Farm Bills, of course, but that's the sort of bill that's going to be passed. They date back decades. Kind of the first modern Farm Bill was around 1973. And we look at the Farm Bill, and Lynette's done a lot of work on material the last week. We got some good stuff. We kind of look at the Farm Bill as a three-legged stool out there. And the cool thing about it is it's a bipartisan bill for most parts. And, by being bipartisan, what that means is that everybody seems to have just enough that they can agree on, no matter what side of the aisle that you're on. And that three-legged stool we talk about, one of those legs is just the security of our protein and food in the U.S. Obviously, we want to put less of our budgets into groceries and food and more into other things, the fun stuff, entertainment, maybe a vacation, maybe it's just getting by for some folks, but nonetheless, cheaper food across the country and making sure that every acre is planted is key to every American. The second leg and the largest portion of the Farm Bill, I think most of you probably know this, is really helping those out that are a little less fortunate when it comes to buying those groceries. So the largest percentage of the Farm Bill goes into helping those that can't make it day to day, able to put food on the table. And then thirdly, we kind of boil it down to the farmers out there. And of course, we concentrate on the crop insurance side, but we want to make sure, and everybody knows on here, we've got the profit matrix now. We brought it back. A lot of folks are using that. It costs a lot of money to put up an acre of corn or an acre of soybeans. And with that, you just have to ask yourself, without crop insurance, it's really interesting to run a profit matrix just completely without crop insurance and with crop insurance, just how big of a loss an average sized farmer could sustain in a single year. It's big. A lot of people like to argue that folks don't have over $1,000 an acre in corn. In the I-states and Ohio and a lot of parts of Kentucky, they do. When we include land costs and we take everything from seed to buying a license for a semi-tractor trailer, it costs a tremendous amount of money. So we want to make sure that the folks in Washington understand that crop insurance is, more than a safety net. We talk maybe sometimes too generalized to our senators and representatives, and we're going to have to be more specific. We hear terms like no harm. We don't want any harm to the crop insurance program. We talk about safety net. We need to get down in the weeds just a little bit more and be specific about what we ask for, and that's what AgriSompo North America is doing. So there is occasionally an effort, and this is a big word. It's a college word, bifurcation. There is an effort to bifurcate the Farm Bill. In other words, take that three-legged stool and break it apart. And all of us on this call, we need to make sure that that is something that we are against. Bifurcation of the Farm Bill leads to a couple things. One, that bilateral, both sides of the aisle coming together, it's going to be a challenge for that to happen. You might say you could throw that out the window. There won't be a majority of things in a Farm Bill that everyone can agree upon. So that's probably our biggest talking point when we go to D.C. is we want to be careful there. And I won't get into the weeds too much. Lynette's probably already shaking her head saying, Brooks, we're going to cover these over the coming weeks. But Lynette, are you still on the call with us?
I am, and I think that's a great teaser. We're going to cover it soon. Stay tuned.
Yeah. So, Lynette, you're working on some stuff. We got a lot of folks here that are internal, and I think that, meaning that they're employees of AgriSompo, we've also got some agents out there. You're working on some pretty cool stuff. Can you give them just a glimpse of what's out there? I know we're not supposed to tell them yet, but tell us kind of what you're working on for the executive committee.
Basically, we're working with Bob Haney to come up with some talking points for our employees in case they're ever asked what our stance is on the Farm Bill. So we're going to include a little bit of history education about the Farm Bill. We're going to include a little bit of information about what's going on in Washington. And then we'll have kind of a list of what we're for and against and some talking points as to why that is. So I think it's going to be really interesting. It's something that we will update as the Farm Bill progresses through the process. And so I'm sure at some point we'll have some stuff for agents as well and maybe the outside world. So everybody stay tuned.
Yeah. I'll wrap this up and show them a little bit more what we're doing. But one of the things we are going to do as well is biweekly. You're going to see the AgriSompo North America Farm Bill Focus. It's going to be a very quick video. We're going to have it out on social media platforms and really, really kind of tell us what's going on in Washington, maybe one little historical fact, and then illustrate, like Lynette said, what we stand for or against. I'll wrap up the Farm Bill talk here right now because I could go on for an hour, but the sentiment last week in Washington, D.C., as I met with representatives and senators and their staffs, primarily their staffs last week, like Ashley mentioned, Ryan Johnston is out this week, and so is Brad Layton. I think Krista is out there as well from Wisconsin. And they're talking to leaders and organizations that we're part of. But I went out last week really to kind of acquaint myself with those staffs, be able to allow them to call us and ask questions about the Farm Bill and crop insurance specifically. And then we'll go back out in May and sit down face to face with the congressmen and women and hopefully make our point. But it was very optimistic. One thing I'll leave you with on the Farm Bill, and I don't want to sound like everything we're against in it, but these are important. Number one, I mentioned that bifurcation. We don't want to separate any of those three legs from the stool. The second thing that we're pretty passionate about, and I think everybody's witnessed this, and probably everybody on the call got to do extra work for these programs over the last few years, but ad hoc disaster programs. We want to be mindful that, there's a lot of issues with them. We don't know when they're coming. We don't know what they're going to be based on. Just think about this. Some of them recently have been based on whether your income was 30% less than it was 2 years ago. And everybody knows how farmers' taxes work. I'm not sure that's a great indicator of someone who is necessarily in need. We also saw in the first round of ERP, where was your claim at versus your coverage, and you got bumped up. Those are all great things. Did that money end up in the right hands? Was it really a fair distribution of those funds? I think everybody knows the answer to those. So today we've got accountants across the country during tax season that are running a lot of reports for farmers. I think if you talk to someone in the FSA office, they're going to say another program out there. What do we have to learn? How many thousands of man hours behind the scenes are these dollars going out to? And some of our organizations in Washington, D.C., they calculate how much money is paid out in ad hoc disaster programs. We think there's a better place for a portion of that money, and a lot of money can be saved. And of course, crop insurance looks like a great place for that to be housed. Lots of things we are for in the Farm Bill. Don't get me wrong, but those are two we've got to be mindful of. So if you got any questions on what's going on in Washington, D.C. or the Farm Bill, shoot them on the chat or shoot me a text. A lot of people like to text me rather than put them out there on the chat. But having said that, Sterling, let's talk markets. What's going on in the marketplace right now?
Well, let's see. Let's go ahead here and switch over, and we'll share a screen. And this first picture, this is what $3 billion on fire looks like. That's a picture of Mr. Musk.
Wow.
Mr. Musk's rocket blowing up here. So the good news is we don't have any markets that look like that right now. Let's go ahead and switch over here to new crop corn. And as you can see, we are beginning to take on a pattern that is starting to look a little bit more like the wheat market than what we had seen in the corn market of old. The market finds some strength and grinds lower, but here recently, 550 is your big magic number right now for new crop corn. And as you can see, we get a little bit of a rally going, and much like a nail on my gate, every time it pops out, some guy with a hammer comes and pounds it back in. And you can see we're slumping back again today. Export sales came out today, and they were not very good, and we'll cover those in a little bit. But we are seeing, much less corn going to China. The nice little run of flash sales we saw that helped lift the market has not been there. If we go back to old crop here, it's a little bit more evident. And everyone, if you're in futures contracts, the May contracts, the options expire on Friday. We're going to be coming into delivery. So we all want to be looking at July. As you can see, we've formed a reasonably good uptrend, and the chart looks a little bit different than it does from old crop because we are seeing that new crop support. Most of the sales we have seen have been old crop, and that's been working to support things. But as you can see, we're starting to get a heavy feel. Could be a case for a double top here, but the market's energy level is a little bit low. And, I think it's going to be hard to get above 650. If you have old crop in the bin, and you see it back up around 650, I wouldn't be too afraid to let anything go.
Sterling, I want to stop you right there because this is where I want to back up to our March advice on old crop corn. When we go back 4 weeks ago, and I know you can kind of do that in the May chart, but Sterling's advice was to watch for 643 May futures. And if we surpass that 643 level, that was a big resistance level. We got past it, and it certainly looks like we're trading kind of in that next level. Sterling mentioned 650 July. Okay, he's mentioned two numbers so far, and I'll talk about those in a second. But last month we talked about doing a basis contract on corn. Despite exports being lower, domestic demand is really strong on the ethanol side and on the feed side. We've got good basis levels. We talked about that 643 to 660. We got May up into the 680s. So if you took that advice, hopefully you were able to put together a strong basis, sell that May in the last couple of weeks, like our March advice suggested, and do something good. Now, Sterling, you mentioned, I'll start with the chart you've got up, 650, okay?
Are you on
Tell us.
July or May? You on
Well,
July or May?
I switched around on you. That's a great illustration on May
Here,
to
let's
show
punch
where
up
we came
July
from in
here real
March.
quick. No problem.
But
We'll punch up July here. There you go.
you mentioned 650. Okay, tell the group specifically what 650 represents here.
Okay. See this line right here? This had been old support for the market, and the market held it, and we managed a little bit of a bounce here, about 15, 20 cents. We fell back through it. Now, when we come back up here going the other way, this is now twice. This is a very bearish pattern right here, and this one's almost as bad. You can see 650. Clearly, people are interested in being sellers at near or close to 650. And I'm talking about things like hedge funds, people who come in with some size. Buyers look at this chart, and if you're a commercial offtake, I know not to buy at 650. And if I were a commercial buyer right here, I'm going to keep my hands in my pockets for a little bit to see if maybe I can squeeze it a little bit more to the downside. But this is clearly historically now becoming an area that attracts selling. And as planting goes on, things get a little more confident. That resistance area is going to become even more prominent, I think.
One thing I've noticed, Sterling, when we combine that 650 with the basis, one thing I've seen out there is there seems to be a sweet spot in basis. And some of you aren't marketers, but some of you understand these markets well enough to get this. The nearby month, a lot of processors have got their needs bought for April. So, they know margins are good. So you don't get that really aggressive basis until the spot that they need the corn the most. And right now across the country, that month is May. So you got a little discount in April, a good market in May, and then it drops back off in June. Now that June and July, that's not an indicator that the cash market is necessarily going to soften or margins are going to go down at processing plants. What that tells us is the market doesn't have a lot of corn bought out May through new crop. And they're concentrating on it's a hand-to-mouth situation. They've got April bought. They're looking to buy May. So if you're talking to a farmer, if you do farm, just look at those bid sheets from these elevators, because a lot of times you'll see a sweet spot. In my neck of the woods, you're looking at maybe a 15-cent premium to wait to May and a 15-cent premium over June. Do I think June numbers are going to be good? I do, but I think we're going to have to wait about 20 days to get there for these processors to get bought up. So you can manufacture in a lot of places in the country. There's some good chances to continue to manufacture something around $7. Now we've got some folks from North Dakota on here. That may not necessarily be the case the further you get away from the Gulf and some of the Midwestern, the I-state processors, but things are pretty good basis-wise in a lot of parts of the country. Ms. Sterling, you mentioned new crop. Now we're singing a different tune. We're going from 650 July all the way down to 550 new crop. Tell us what we need to watch for there.
Okay, so looking at new crop, 550 is the big magic number. And that is, if we start to break through there, we're going to be opening up ourselves to a lot more downside potential, I think. As you can see, we've held this area and its known support. You will probably attract some buying interest, but if we start to see new crop going in better, we don't have any problems, anything to cause any building of risk premium, we start to leak through here, your next support comes down here at $5. So that's
Sterling,
something.
we talk about these acreage, and we've had Outlook out there. We've had our March 31st prospective acreage report. For all practical purposes, we're going to say that March ended us up at 92. I think it's 91.9 and change.
Mm-hmm.
I'm gonna text. I'm gonna try this chat thing. I'm not very good at it, but will the nation be above or below 92 million acres of corn? If you're not driving down the road, reply back to that. And give me a thumbs up if everybody got that. Sterling, did you get my chat message?
I actually don't have that box open right now.
Okay. All right. Well, everybody else does. Oh, we got above. All right. All right.
Below, yeah, below,
Above.
above.
Interesting. Interesting. I would say that, to answer this question, we're probably all looking out your back door type thing. My guess is North Dakota. If you've got snow on the ground, you might say below. I think there's snow in Minnesota right now too. But yeah, Brooks says less. Mark says that I just have this feeling that it might be. Now I'm going to mention these two words, and we don't like to hear these in crop insurance, and I know agents don't like to hear them right now too. But prevent plant. I want to go there for a second because I get a lot of calls on this, and the calls usually come from farmers, and the farmer says, I think I can make money with, and I, used correctly. Okay, I'm not suggesting anybody is planning to prevent plant, but I think I can still make money if I have to take prevent plant. It's a challenge for me to accept that because the costs are so high right now. If you use our profit matrix, you put everything in. The big kicker that's going to differentiate farms is land costs. All right. So, and I specifically mean out-of-pocket land costs. There's really four primary scenarios that are out there when it comes to land cost. Number one is cash rent. That's easy, right? It's the amount we're going to pay to rent that acre. These cash rents, what have they done? Well, they've gone up. They've gone up year on year. The second way that we do it is we own the grounds, and you either have a principal and interest payment on that land, and that's out of pocket, right? It's tough to kind of call that on par with cash rent, but in a cash world, it's out of pocket money for a farmer. If you've got land that's paid for and that you farm, it's a different situation because that money doesn't flow out. In theory, I realize you want to be paid for your investment. We should calculate the value of that land with a 3 to 7% return, and that's the land cost, but that's not the reality of how most farmers operate. It's what comes out of their pocket. The fourth way we have land costs is on crop share. And you may split an acre 60-40. Your land cost is not 40% of the gross sales. It's 40% of those gross sales minus what the landlord pays in expenses. And a lot of times they pay fertilizer and chemical. And occasionally there's some seed situations. It's different everywhere. But that's going to be your number one differentiator. If you're throwing $200 to $220 an acre at land rent and you think that's the only cost you're going to have, you're wrong. If you've got equipment payments, you will make those equipment payments regardless of whether you farm that acre or not. You still have that cost that goes into it. You've got labor, whether you pay yourself a salary, you have employees out there, you still have to write those checks for labor. In a lot of cases, you're going to have to do something to maintain that land, whether that is tillage, whether that is mowing, whether that is herbicide. It's got to be maintained. There's a lot of other things that come along with it too. Your insurance premium, for one, it doesn't go away. You still pay that insurance premium. You still license all of your trucks just like you always did. You still have your legal and accounting costs out there. To my point, they still add up. Even if we may not be putting fertilizer, we may not be putting as much chemical into the program, we may not be buying seed, there's still a tremendous number of costs that go along with it. So I want everybody to really, really dig in when it comes to looking at prevent plant. So Sterling, that's one question I've been getting here, and at 92 million, with the majority looks like maybe above 92. What would that mean for the corn market?
Well, 92, and I think that's aggressive, and I think we're going to be lower, but we're going to a little chart magic here, and that would put this. I would guess that that's probably going to take us, depending on how the weather works out, we're probably going to be knocking on that door of $5.
And at 92 and back in March, what was our targeted yield? It was at 181 sterling.
181. So if you figure 81 times 181, that's going to get you a big crop. And that's going to push that carry out. Oh, that could add 400, maybe as much as 600 to the carry out, depending on how exports go.
So we're just now 181. We'll leave the debate on acres out there. We'll know more on June 30th. But 181, it's a big number. It would be a record crop nationally. It's going to be in jeopardy over the next 75 days. In other words, that 181 bushel, no matter what the projection was, we are entering a period of volatility. Sterling, most years, we see opportunities, sometimes as early as May, sometimes as late as July. If we do achieve that 181, tell us what we need to look for on new crop sales over the next 75 days. Do you think that there will be that 3-day blip where we have that fear of that dome of heat out there? What are the odds of getting some volatility back into this market?
Oh, we will get some volatility. And typically here, let's actually, rather than trying to do it from memory, let's take an actual picture of it. I'm going to bring up a chart here. And this is a chart of December only futures. And tap this out seasonally here. And as you can see, this is the last 5 years. As you can see, coming right in around May 7th, right in early May, we get a blip. Okay. That's, oh my God, we're not going to get it planted. Oh, it got cold. The weather did something. And we've managed to produce a little bit of a blip. Now, notice these were also going on when we had fairly bullish backdrops, meaning the South American production was not what it was this year. Go on to more normal years, like this is the 5-year average. You can see again, we can look for a little bit of improvement. We typically get another little blip in July, in June. What we need to be aware of is very often when we come in, we get right around the 1st of July. Very often there is trouble. Very often. And if we take this back more years, take this back 10, and again, we look into this July period, you can see prices start to slump there. So you will get your opportunities, typically get a couple of chances in May and June. After that, unless we're starting to have some meaningful problems, that typically takes us lower, because this is not going to be a construct like we saw the last couple of years where we didn't have that South American production going on. Now, Argentina has cut their production again. It's a meaningful cut, and that may be one thing that might help us out. There's one other thing here that I want to point out with corn, and I'm going to switch to something completely different here. I'm going to look at export. I'm going to look at corn export sales to China. We're going to bring this chart up here. Now, we had our first little blip coming back here in March where we saw some flash sales. We had our recent spate of flash sales. This chart says that there's going to be another round of purchases coming in May. That has been the historical norm for China. Notice how each of our little spikes for this year, the bright blue line, not nearly as aggressive as we've seen in the past. Caution and warning about this bit in May. This may happen, this may not happen. If it does happen, it's probably not going to be as much, because China will be feeling secure about getting their supplies from Brazil. So that's something, this blip here corresponds to that bounce we had in the market. And we can't count on this.
Give some folks some background on this. We started off whenever we do our supply and demand tables, you back us up to 10 months ago, we felt ultra bullish on exports. At one point in time, we pegged those exports at, this is going to sound like a crazy number, and it was industry wide, around 2.4 billion bushels of corn leaving the country. And China was a big portion of that. Fast forward until today, okay, we've dropped that down to around 1.8 billion. Okay, if there is a surprise, we keep our fingers crossed here. Sterling has just illustrated this very well. If you take this chart right now and you see that third yellow incline on the chart, it coincides well with that rally, that seasonal rally chart that you just saw those last 10 years. Let's watch this, okay, folks. If we could get a piece of good news in exports, if this cold spell holds on, we get a little bit behind on planting pace, that May 20th through May 30th could be a decent window to make some of these sales. It certainly could. But it does appear with anywhere close to an average crop and anywhere close to 90 plus million bushels, carryout should maintain or grow slightly. And that's not a bullish factor. So back to kind of what we've talked about in these last few meetings. Will we have opportunities? Yeah, we both believe we're going to have opportunities. Are you going to have 60 days to sell $7 corn? No. Will you have, I'll back up since we're switching from new crop to old crop to new crop, but will you have 60 days to sell 650 new crop corn? Probably not. Might you have 6 days? You could. Maybe it's not 650, maybe it's 625. The wait and see attitude that's been so successful over the last 36 months sure looks like it's exiting stage right now.
Yeah, I would be on my trigger. You see new crop above 6, be ready. Be ready. Have the account funded, have your tools in place to use it, because those windows will probably be short and quick, and they may very well be incident driven, something that causes some fund buying or short covering, or something happens in the wheat market, because if the wheat market bounces, that tends to shove corn higher. Those would be the things that I would be looking for, because we cannot count on having that endurance simply because global supplies have expanded some. And that is something, again, it's not as clear cut as last year, and it's not, screamingly bearish like we would see in other situations. But we are, the market is beginning to shift. Do you want to talk about soybeans?
Yeah, absolutely. Yeah, we need to go there.
All right. So here is a crop of November soybeans. And as you can see, my office assistant has joined us. And you can see this is, and again, we had a 1250, there's our line in the sand right there, clear as can be. The market bounced out of that, but the bounce didn't really confirm, and we're starting to drip lower. Now, if we see those giant corn numbers, we're not going to see as many soybeans. So that is something that will give this market maybe a little bit better tone. Now, I'm of the opinion we're going to see corn acres come back a little bit in favor of beans, given, very early weather ideas, and also some of this situation maybe in the Dakotas might lead to soybeans getting planted over corn. Again, we'll see how that plays out. But
A comment on that real quick. I have this feeling that with soybeans being so good and old crop supply being, we can call it 230, we can call it 230 million bushels left over. You and I have talked about this. 230 million bushels is like zero. And we talked about this over the last 6 months. You've got what Sterling calls dislocation of soybeans. And so you're going to run out of soybeans in some places. The carryout can actually grow despite the economics of processing being tremendous. How does that happen again, Sterling? How do you gain some extra soybeans at the end of this thing whenever crush margin is making $2.50 to $3 a bushel, or crush
Well,
processors making $2.50 to
well,
$3 a bushel.
you have a situation where you have crushers in Kansas who can't get a hold of the beans in Minnesota to get crushed. That's one problem. Well, you want to talk about some real dislocation? Second biggest crusher in the world, or third, we'll see how it plays out this year, is Argentina. Argentina may very well have to import soybeans to meet their crushing needs. Whether or not they're able to import those soybeans, we'll see, because obviously they'll be coming from their neighbor Brazil. If Argentina cannot get their hands on those beans, and you have crushing needs, and I'm somewhere in the Netherlands and I need soybean meal, where am I going to get that meal from? Get it from the US. So that may create some very interesting cash market behaviors within the soybean complex leading up to harvest.
So
It's a
I think
theory,
certainly
but
my my
we'll see how it plays out.
my point on starting that conversation was, I think you'll have, rather than prevent plant necessarily, I think you could have an organic switch from corn to soybeans, just because how good that soybean market is, how strong the basis is on soybeans, and those expenses I talked about on corn are high, and they're high on soybeans as well. I think farmers will plant beans even if they're a little bit later in the year, rather than prevent plant. That's my take.
Exactly. Yeah. And we have one other factor that's driving the soybean market, and it was a small feature in years past. This is a bigger feature, and that is the price of soybean oil, which normally you crush for meal, and oil is kind of the slick little bonus. Now, with the way we are with the biodiesel situation and things like that, if we were to see a material rise in crude oil prices, that would push soybean oil up. That would increase crush margins. That would naturally be a bullish factor within the entire soy complex. So, in some ways, I think we have less downside risk, or we have, maybe let's call it, more upside opportunity to prevent downside risk in soybeans than we do with corn.
Yeah, and I think the farmer has that mentality in mind too. It certainly seems like there is a hard stop on soybeans at some level because of this robust demand that's out there. You're getting some chat responses back here. It looks like hope and wait is the marketing is going to be the marketing plan of choice for a lot of farmers out there. And hey, it's worked the last 3 years. I wish everybody the best on that strategy. Unfortunately, on my few acres that I put out, that's not an option for me. If I see an opportunity above 6 on futures, I'll probably be taking some action here. On soybeans, Sterling, we see you've got we're down there in the $13 range. What do we look for here? Is there any hope of getting back up to that $14 level?
That is possible. It's going to depend, one, obviously, on how many acres. That's going to be the biggest thing. And two, you're going to need some outside help here. If we, and I'm going to switch charts here real quick to this big, slick, goofy stuff here called crude oil. We had our explosion higher here, and we created what is known as an island. And those who trade on an island often get, half of them get marooned. In this case, if you bought on the island today, you're now Gilligan and you're marooned. So we're going to see oil prices come back and fill this gap. If we see oil prices generally move up, that will be fundamentally supportive to soybean oil. That in turn can help old crop soy, our new crop soybeans, and actually old crop too. And if we see old crop beans start to move up during the summer, if you're one of those lucky people who can plant early soybeans, you may get the best of both worlds here. So if we look at July beans, you can see the picture is, again, the chart is heavy, but we pretty much know, at least for the time being, we're playing 14.50s cheap, $15 are dear. If we can get this to back creeping back up above north of $15, that will help lift old crop or help lift new crop, lift the November contract, getting some help from these July beans?
Along the lines of energy, you had crude oil up there for a second. One thing that I maybe have been wrong about a couple of months ago, we talked about motor fuel, specifically unleaded in the United States over the last 4 or 5 years. We hit a high nationwide of around 142, 143 billion gallons of unleaded used as motor fuel prior to COVID. We came down in COVID and we lost almost 21 billion gallons of that usage. And we kind of started to make our way back up, and we were around 132. Diesel demand's pretty decent right now. Unleaded demand's pretty decent. We may actually, I think I said a couple of months ago, it may be a challenge to ever really use more than 132 billion again in the United States on motor fuel, but I may be off on that. There's a decent demand out there, Sterling. What do you have to say about that, the energy side of things?
Well, this first chart here, this is a chart of unleaded futures. And we had our nice little dip here that we didn't really see at the pump. I noticed when I was gassing up the beasts, gas prices here moved from $3.19 for premium to $3.53 in about a week and a half at Costco, but we are coming back down right now. Let me see if I can get us a gasoline use chart here for the
One
U.S.
thing that's kind of
If I
interesting
can
while Sterling's
spell it.
pulling that up is that the California, Washington, Oregon never really recovered from unleaded usage through COVID, and they're down 10 to 15% on usage. But even Midwestern states like Illinois, I think we were down about 6 to 7%. So it's kind of surprising where that demand's not coming back. I would have assumed a lot of the Midwestern states would have really unchanged. Minnesota, the Dakotas, Kansas, largely unchanged. But it was surprising. Even Ohio was down about 6% from that peak prior to COVID.
And that's not the chart I'm looking for. I will throw into Friday's report a chart of gasoline use here when I can dig it up.
One last thing before we leave soybeans, Sterling. I want to talk about early soybeans. Okay, I want everybody to kind of remember and backtrack a couple of months ago, a really, really wet start to Brazilian harvest on soybeans. In some cases, maybe 30 days behind. What that led to, if you remember back in February, it led to some additional exports of soybeans leaving the United States headed for China. In other words, China was buying our beans because the Brazilian beans weren't available yet. Harvest, I think, down there is around 97% complete, and you continue to hear about that record Brazilian harvest. And of course, we talked about that. It was a record not because of the yields per acre, but because of the number of acres planted. But Sterling, how could that later Brazilian harvest affect what we've in September? If beans come on the market, they're snatched up very quickly by big premiums. Will that later Brazilian harvest affect our ability to sell really good basis levels in September this year?
It may. This is a chart of Brazilian soybean prices. And as you can see the effects of, the late harvest with this little bubble right here. Notice today they've moved to new lows. Those Brazilian beans are coming into the market, and they're coming into the market, but good. Brazil is, of course, we have logistical problems. So I'm of two minds of this. If all were good in Argentina, I would say yes, we would definitely have a problem because those Brazilian beans will be right there. There'll be more coming to market later, and that will hurt the premiums. If Argentina needs to import, and I've heard numbers as small as 2 million, as high as 11 million tons of soybeans to meet their crushing demands. If that happens, we're going to have this unusual new problem in the market that may work to gobble up some of these soybeans. If Argentina cannot get those beans, U.S. crushers will be the only resort to finding said meal for the rest of the world. So we
Very,
do
very good
have,
point. Sterling, kind of outline that for us. Argentine bean versus Brazil beans. Whenever they leave the country, what's the biggest difference?
well, the biggest difference, one, Brazil mainly exports beans, although their crushing capacity has improved dramatically. Argentinian beans, more often, Argentina wants to be an exporter of product, meaning they export soybean meal to feeders in Europe. They export that soybean oil for biodiesel use into Europe. In terms of quality, beans are beans. Basically, down there, U.S. beans are still obviously the choice of the soybean. But if Argentina can't find the beans to crush, you're going to have these crushers, and they're going to have contracts, and there is going to be demand for that. And that in turn, either those beans go to Argentina and get crushed, the U.S. finds more crushing capacity. Who knows? Maybe in the East Coast, maybe we have to import some beans to meet that crushing need that Argentina is not going to be able to fill. So we have a very nuanced, very different situation that to my recollection, I don't think I've ever seen this before going on with the processing situation in Argentina. So this is something that's going to create potentially some interesting demand opportunities, let's say from July 10, moving all the way through August 31st.
That's going to be a challenging time to select those basis levels, and how it works in the southern part of the country. If you've got a processor located close to an export market, that's a wonderful combination. We talked about how the market's kind of a domino effect. One leader has to drive the rest of the things. If you've got a processor that has the ability to load meal out on the river system, you want to be looking really closely at some bids there and how they're going to be structured. It's not going to be much fun. They're going to be structured over 5 to 7 day windows. So if you pick your 5 to 7 day window, your premium should be there. If you do not get those beans delivered in that 5 to 7 day window, there's a very good chance you're going to get a discount because it was a stated premium. So there's going to be small windows. I don't look for farmers to do much until they're about 2 to 3 days away from harvest. You don't know when those beans will be ready to go, so it'll be a challenging thing. But there'll be a sharp edge on this thing. And I think that sharp edge comes a little bit earlier. The last couple of years, we've had great premiums really through the month of September. This year, there's going to be a sharp edge, whether that's September 15th, September 20th, and those premiums are going to disappear once that potential meal demand is met. I think we'll have really good basis levels. I just don't know if we're going to be at those extreme levels. Last year, there were some farmers that got over $1 over the market in the Ohio Valley and lower Mississippi regions for beans that were harvested the first part of September and last part of August.
All right. So again, this year, it's not going to be as easy as it was the last 2 or 3 years. This is a year where paying attention is going to matter. And do we want to talk about wheat?
Well, I'm afraid we're going to have to. I see some Oklahomans and some Kansans on here, and we've got our fair share of woes here in the Ohio Valley when it comes to soft red too. So let's talk about this beast.
Well, this is what a bear market looks like. You get little bounces and it gets clobbered. You get a little bounce and it gets clobbered. Hope springs eternal, you get clobbered. You get a little bit of hope and you get clobbered. You get a little bit of hope and you get clobbered. And this pattern right here, this is a very bearish pattern. See, we came up, we made a new high, we failed the following day, and we're trying to fail today. That is, as far as chart patterns go, one of the most reliable patterns there is, and it doesn't happen that often. But here we have, a fresh intermediate high followed by failure. This,
I really, really don't understand the wheat market. I mean, and I'm going to throw some things out there, and I want you to be the contrarian, okay? We mentioned before the start of the official recording, hard red wheat ratings horrible. I think you had a chart, the lowest rated good to excellent category, and the chart goes back to 1993. So
Yeah,
I know
this
I'll get
is going back 29 years. This little blue line down here at the bottom, that's our current wheat conditions.
so you got to scratch your head. That's bullish, right?
Well, that is, in fact, that is a bullish factor. The wheat market burned a lot of speculators with the Ukrainian situation. They traded it as an acute immediate problem. It did not work out as being an acute immediate problem as wheat was readily available. So all these speculators who bought wheat got their little fingers burned. So they are a little bit unwilling to come back in and jump in the market with any sort of meaningful purpose. Even in Kansas City wheat, it's the market complex is the same. So that is the first problem. The second problem is the situation in Europe. Yes, we don't have boats moving Ukrainian wheat out. They may try to ship it through Poland, but something new that has developed is to protect European farmers from a glut of wheat coming out of the Ukraine going into Eastern Europe. They don't want the Ukrainian wheat. So this in turn, along with stout Russian production, has created a situation where you have people who are going to be hand to mouth about buying this. No one's in a big hurry to forward contract any of it until there's a reason to get nervous. Hand to mouth markets do not get all that bullish. Along with this, you have no speculative demand for futures contracts. So when you create this combination, it makes it very, very hard until we get some actual material changes in things. One, this crop gets a little bit further along in Kansas. If you look here at our condition chart, we look at conditions and that chart runs a long, long time. It runs for an extended period. So there's a chance this crop gets better. Then we need to throw in the Dakotas and the spring wheat situation. If we see material planting delays, material loss in acres, that may be enough to shake the Minneapolis wheat contract loose. It can start moving. If it starts to move higher, it will lead the other two higher. But right now, the path of least resistance is down. If you're a commodity fund and you're trying to be bullish as stuff, you're not winning and you're just going to back away from it. And that's where we're stuck with right now. And Australian and Russian wheat production ideas for this year are again quite stout. We can offset that with the weather in Argentina improved a little bit, but it hasn't improved that much. We're coming into the period of time where Argentina plants wheat. Maybe we can have a problem there. So we have nebulous ideas and some concerns, but it's not enough to get that guy on Wall Street yet to go in here and buy wheat after he's, been beaten multiple times.
So Sterling, good job on combating me there, but I challenge you on this one. Okay, soft red wheat in Chicago. Speculators over 50,000 contracts short. Is that right? Over
Well,
40,000 contracts short.
yeah. There's your fund position, your fund trader in the wheat market again. There, he looks like Elon's rocket if he's not short. But here I'm going to pull up the chart right here. Right, actually, here. Hold on. I've got a better chart of this here. Hold on. We won't do it that way. We'll do it like this. Pull up the chart that. This is why we need to make sure we read everything every day. This is the fund position in Chicago. This is the current version of this right now, and they are short 83,797 contracts, and that's off the supplemental report. There's a reason I use the supplemental report. I want to keep the index trader in his own box because I use a different kind of analysis on that. This is of active fund managers only. These are the guys who trade every day. So we see we had a peak short right here, which was nearly a record, and we have kind of fallen off. And again, we're seeing, additional selling pressure. So yes, this is fuel for a rally, but we have to have a spark.
Well, that spark's got to be. I mean, who are the buyers out here of this wheat? I mean, I know we don't know how short they can go and when they buy it back, but at some point in time, don't they have to step in and there has to be some, like you said, spark out there. But and I know we're talking hard red versus soft red here. There's a little different play, but when do you expect them to step in and take these off the market? And why aren't we seeing folks that want to be long corn and beans? Why are they not wanting to be long wheat in this overall market? I mean, these are
Well,
folks that really may not know the difference between corn, bean, and wheat. If you held up a kernel or a seed of each one, when will
oh,
they step
oh,
back in?
when will they step back in? First, they tried getting short corn, and we did have a net short position in corn. They had to come in and buy that back. They're still long soybeans in mass. What's it going to take to get them to come in here and buy this? A true risk off situation would be the first thing I would look, where right now you see the market is coming down, so most of these positions are profitable. By risk off, I mean we see a global event that produces a 5 to 7% correction in the stock market in one day. You get something like that, you'll get risk off. That might spark enough momentum to get the tank turned around. If we see material loss again in those acres, particularly in the Dakotas, that would be enough to get it going. Or if we were to see, a pretty steep embargo on Russian wheat. The problem is when we put sanctions on Russia, okay, Western Europe, the US, Canada won't buy things from Russia. Other people will. China, India, um, places in the Middle East, Saudi Arabia, places like that. So while those sanctions work a little bit, they don't necessarily stop the global wheat flow.
Well,
And if
fair
you have,
enough.
and if you
I,
have,
I, you got to keep playing the game with me here. You got to keep playing the game with me here. I went to a satellite webinar on satellite ag and 19. I mean, it looks like to me legitimately 19% of Ukraine and a little bit of Russia. It looks like that prime wheat ground may be out of commission. Doesn't that add? Is that not our spark?
that's a spark, but it's not enough of a spark. Yeah, that's
I'm
that's the
trying,
problem.
everybody. I'm trying to be bullish. I'm trying to be bullish wheat for
Oh,
everybody, but Sterling's not
and
that.
I've tried, but again, after you smack your finger, and if you read my commentary, I've kind of floated out a little bit of hope for wheat, but every time it's like I hit my finger with the hammer,
He has. He
and
has. And by the way,
I see some.
Wednesdays are great days to read Sterling's commentary because he has tried to put optimism in wheat 2 of the last 3 Wednesdays. But if you get our daily market email, check those out because he's done his job. He's tried to provide that Sterling Smith spark out there. It just hasn't taken yet.
Yeah, I'm hoping a fund manager somewhere who reads this sees it. I'm not asking you to go long. I'm just asking you to cover a little bit of shorts and maybe get the ball rolling the other way. And right now, that's hard. Another thing that will make it harder for them to come in here and want to buy wheat is if we start seeing row crops, our crop gets off to a good start here and things are looking, heavy for corn, that could be another issue. And then we haven't even gotten into the currency situation, which so the dollar's actually been reasonably helpful here. Um, but thus far, it's not enough to move it. And we have a similar situation going on in cotton, where 3 days ago we had broken out of a very narrow channel and we traded very, very well. They came in and knocked it back yesterday, and today cotton's getting tarred and feathered. So,
So what gives here? It sure looks like to me, and I don't study these charts like you do, Sterling. It sure looks like to me, and this is the scary part of this whole market. Wheat and cotton seem to lead the charge on these big rallies and these big declines. Is there anything to that, or is that just simply coincidence?
It's somewhat coincidence. Cotton in particular is very subject to having fund behavior drive the market. And right now, the funds are not wanting to be long cotton. We have some problems with cotton. One, tensions in China and Taiwan. When the first thing when I turned on CNBC this morning at 6:45, the first thing I heard was talking about blockading or invading Taiwan. I'm not one to go around screaming, making big political things and making hay where there isn't hay, but that's the first time on national media I've heard that. That's different. When those editors at CNBC, and I know some of them, if they're willing to put this on TV, it's not because they want to or they're trying to get hype. And that is a worry. We're moving that from something that was kind of out there, kind of nebulous, to something that is starting to move in to where it's becoming, maybe, hopefully, it's just news media over worrying, a little bit of paranoia, but we seem to be sliding into a different thing. If that happens, everything we talked about today, give me 24 hours to process it, because it's a completely different situation.
Very interesting. We've always dismissed any kind of saber rattling over there as this too will pass, and it is something. It's probably history tells us it's a long shot that there could be a problem there, but we're certainly closer to that point today than we ever have been in the past. Well, Sterling, we're coming up on an hour. We've talked a little bit about Farm Bill. I think we did a good job of breaking out corn and soybeans. The biggest takeaway, I think, from this meeting is the forward marketing time period. Just maybe the Taiwan thing passes. History tells us it usually does. Maybe China steps in. Is that a way to buy a cheaper commodity in the future? It certainly could be. Maybe they step in that May time period where they normally do. Maybe they exceed expectations. We've already trimmed those exports down to 1.8 billion on corn. Maybe they do. Maybe that culminates with that risk period on this planted crop. I really like that May 15th through June 30th time period for some new crop sales. Hopefully they get to levels that farmers can stomach those. It's tough when you're selling, we got a dollar inverse in the market. It's tough to sell anything ahead. Sterling, highlights from the meeting from your perspective. What are your takeaways?
Takeaways, very interesting time for soybeans. I think that is the number one thing. The other thing that we didn't even talk about that is the most interesting and most bullish market we have is the cattle market, and the fact that supplies are tightening. We're going to have a cattle on feed report this week. And again, we're going to see supplies tightening a little bit. That does hurt feed demand, but I don't think that's going to have much to do with soybean meal prices. We'll see how well consumers are willing to pay up for beef. Pork prices are deeply depressed, and there's a massive fund short position there. So we have that. One other thing I'd like to add is the May WASDE is the first look at the new crop, and we'll be covering this. The Outlook Conference has corn exports pegged at a very large number. The last few years, we've seen the May WASDE more or less reflect what we've seen in the Outlook Conference. They don't have to do that. If we see a change in that number, which I think they pegged it at something like 2.2, we're at 1.8 now. If they move that, that could be a market changer. So again, I think the biggest takeaway is now more than ever, it's important to pay attention. And by the way, cotton's limit down.
Cotton limit down. One last comment on kind of a geopolitical strategy that could be a spark out there. In Ukraine, we talked a lot about this a year ago, Sterling. We kind of all became Ukraine experts about the same time. But farmers in Ukraine, we know that there is a portion of the country, primarily in the eastern part, it's a really good shot that a crop's not planted. We didn't know what was going to happen last year. Keep in mind, in Ukraine, you use a lot less fertilizer on an acre of corn in Ukraine than you do in the United States, mainly because of the soil types. that are there. A lot of this fertilizer is on hand at the farm prior to planting. Okay, that is probably less of a case this year than it was last year. So remember, in peacetime, you're collecting all of the inputs that you have to have on the farm, whether that's fuel, fertilizer, seed, maybe a little more challenging time. And that primary corn area in Ukraine, if you kind of follow that Dnieper River down to the export facilities, we talk about Odessa is one of the coastal. I'm not sure if it's at the mouth of the Dnieper or not, but that Dnieper River, it's kind of a V, and that's your primary corn growing area. We almost certainly will see fewer hectares of corn planted in Ukraine this year versus last year. We just don't know how much. We don't know where that corridor is going to be open as well. So maybe those are our sparks. Maybe we can get something going there.
A chronic, what was traded as an acute problem now becomes a chronic problem where we don't see as much coming out of the Ukraine. And one last chart that I wanted to show everybody. Anybody want to guess that this chart that stretches all the way back to 1925? So we have fully 100 years of data here. Anyone venture a guess on what this is a chart of production of for a agricultural commodity in the United States? Anyone going to venture a guess?
I can see it up there, Sterling. I can see it up there. So I was going to play the game and tell you it was like tulip bulbs or something like that. But looks like to me it is Florida orange production.
That is Florida orange production. At our peak, we were producing 244 million boxes. This year, we're going to produce down here at 20, basically the same level as if we go back here as 1935. So keep in mind, things evolve and things change, sometimes rapidly.
It's crazy to think. Crazy to think. Well, hey, I appreciate everybody. We had a good chat commentary, and I like the back and forth in the chat every once in a while. Sometimes it's hard to type and stay on the air, but I appreciate everybody taking the time today to be with us. I think it's one of our better meetings. I think that the next two are going to be packed with a lot of action items. Have a good feeling about things in May. Have a good feeling about things in June from a market perspective. We'll see what happens. But I appreciate Ashley and Lynette behind the scenes getting us where we need to be. Stay tuned on the Farm Bill stuff. We're going to put some stuff out formal. I think over the next 2 to 3 weeks, you'll start to see a little bit of that develop. If you've got any questions or would like to participate in taking some of the messages that we put out to your representatives and senators, we would love to help you formulate the information that you give them. From the folks at ASNA Edge, we'll sign off. You guys have a great Thursday, Friday, and weekend. We'll see you next month.